Now, Asian stocks gained on Friday as President Donald Trump's plans to gradually reopen the U.S. economy outweighed concerns over data that showed China suffered its worst economic contraction on record, and that's due to the coronavirus outbreak. Now, China stocks also ended higher this morning, with investors looking past the country's first quarterly economic contraction in at least 28 years, pinning their hopes then on a state-supported recovery as the impact of COVID-19 recedes. Now, data from China show that the world's second largest economy shrank for the first time since 1992 because of the COVID-19 outbreak and tough containment measures. GDP there contracting 6.8% in the first quarter compared to a year ago, slightly more than expected, which is 6.5%. So Japan's Nikkei, well, that ended up 3.5%, so a good day for them, still below 20,000 points though, while the Hang Seng Index also managed to gain 2.3%, headed higher on that front. The Shanghai Composite, forget the red, that is still up around 0.2%, 2,838 points. Over in the United States, well, the S&P 500 and Dow Jones slipped on Thursday, giving up early gains as concerns about dismal first quarter earnings and lasting economic damage from the coronavirus pandemic offset better than expected weekly jobless claims numbers. The 4.7% fall for Boeing drove the blue chip Dow Jones Industrials down more than 1%, as European rival Airbus said it was examining requests to defer deliveries after a collapse in travel demand. Now, the Nasdaq outperformed the broader market, with Amazon.com and Microsoft all boosting the tech-heavy index for the fifth session in 6. Let's head on over very quickly to that European market and see how things are faring there too. Sense of positivity has gained into this market, and that is despite China contracting 6.8%. The expectation, I suppose, was that it would certainly still get us to this point. So many people expected China to have fallen anyway. It was 6.5, 6.8. I suppose everybody's just looking at it as half a dozen here, while 6 on the other side. So not much to write home about, but some gains on the European markets. Locally as well, we're getting a sense of positivity filtering through into our local market as well. So the JSE All Share now headed towards 50,000 points, having fallen below that mark quite recently and staying up there as well. Industrials enjoying some good numbers too, while financials seem to be trading in positive territory. Also, a mixed bag, however, here when it comes to the commodity shares. Overall, resources are doing well. Of course, Impala Platinum has a few questions that it will certainly need to answer, with the CEO of their Rustenburg operations there, Mr. Monroe, being arrested and then put out on bail for 60,000 rand, having breached the lockdown regulations by asking staff members to come back to work, having not received permits or permission to do so as yet. But they are allowed to operate at 50% capacity, with Gwede Mantashe, the Minister of Mineral Resources, saying that things will begin to ramp up as time goes by. So the platinum counters overall, though, still headed higher. All right, let's take a look at your commodities. Platinum price going down, having headed towards that $800 a fine ounce mark a little bit earlier on in the day. The gold price is also not seeing too much by the way of gains as investors perhaps try to eke back into the equity market. But look at that oil price. This is despite then the fact that Russia and Saudi Arabia have said that they will do anything they can then to support the oil market if necessary, and committing then to that 9.7 million barrels per day promise then to cut out output on that front. So the price does head higher, but it's still languishing below $30 a barrel. And very quickly onto your currencies then as well. Weakness still for South Africa's currency in terms of where it is in comparison to that 19 Rand mark against the US dollar. So we're at 18.77. Yes, better than yesterday, but really not much to write home about there. 23.77 for that pound. The euro, 20.32. And very quickly, and here are the BRICS countries still pretty stagnant, of course. And let's remember that we did confirm that loan from the New Development Bank as well. First of many, perhaps, as we seek funding from multilateral organizations as well. Let's chat to Warwick Lucas now as we unpack this market picture a little bit more. Warwick, thank you so much for the time. So it's an interesting one when you see the market going up despite China going down so much as well in that economy. Was it much because it was, I suppose, expected to go down anyway, and market participants are just looking for some positivity?
Hi, Rabila. Yes, I think very much the case. We have two massive opposing forces here. The one being, of course, a near depression type economic prognosis from the sudden shutdowns of economies, with some of the growth numbers forecast. I mean, I'm looking at Europe, for example, annual forecasts of up to -9%, as against the largest liquidity stimulus and injection that I have ever seen. And I suspect that a big part of market holding up against such a dismal earnings outlook is an expectation, one, that economies would recover very quickly after the passing of the virus, and two, that this liquidity will then support markets thereafter. I think you can appreciate that there's obviously some heroism in those kind of assumptions.
Yeah.
And I can't help but wonder if markets are being a little too flippant in the face of this news flow.
Yeah, so one would expect then that it would go down somewhat. Is China sort of the benchmark of how bad things could be when it comes to growth? Do you think they've set the benchmark down 6.8%? Could it get worse for other countries?
I think other countries could get quite a lot worse. I mean, China would appear to have been able to choke the growth of the virus off sooner. And it also has a relatively younger population, which then has less capacity to overwhelm hospitals, which, however, it turned out to be the case anyway. So we'll see it probably get quite a lot worse, particularly in the European Union, which has aging populations, and I think came too late to the party to shut down. And of course, then when we saw their shutdown, well, the horse had already bolted.
Yeah. Has the rand's fall been sort of halted right now? Yes, 1877 still weak, but at least not 1935.
I think for our rand to really have some kind of floor put under it, I mean, the economy needs to get back to work again. I mean, we are, after all, an export-based economy with more than half of that determined by commodities. And, of course, commodities are related to manufacturing production. And manufacturing production, of course, is at least substantially dependent upon what happens in China, but certainly also the rest of the world. So we are the tail on another very big dog. Of course, our rand has acted as a shock absorber, but I mean, it's only a shock absorber to the extent that our economy gets going again. So I think we're faced with a situation that we need to get on and out of lockdown now, whether or not we have actually bought ourselves enough time with our lockdown.
Yeah. Well, that does spare some sense of good news, if I can put it that, or a little bit of optimism, if I can call it that we have bought ourselves some time. Hopefully, we can use it correctly. Warwick Lucas, thank you so much for that. Really appreciate it. Warwick Lucas is from Galileo Capital, helping us unpack that market picture there. But very quickly, we spoke about the growth rates, right? South Africa is bound to suffer quite extensively. We did speak about China and having seen their growth rate come out at 6.8% in terms of contraction, right, for their economy. So a massive fall, a global recession around the world is estimated. This is what that growth figure sort of looks like now for the rest of the world, or rather South Africa. It gets very, very difficult. In the blue is the initial estimate of where growth would lie. Investec had estimated around 0.8%, with the World Bank at around 0.9%. The IMF also 0.8% initially. That was their estimates either early on this year or late last year. National Treasury in budget had budgeted in February, had estimated that we'd grow around 0.9% as well. Fairly optimistic there. But the South African Reserve Bank in their March meeting had said we may see South Africa perhaps contracting around 0.2%. So in negative territory. BNP Paribas didn't have their number yet, while Fitch and Moody's had their numbers out. Fitch very optimistic there, seeing 1.5% growth for South Africa, which is pretty optimistic on that front. Moody's seeing growth go down around 0.5%. In the red, though, is how bad things have gotten since the realization of how bad things will be when it comes to COVID-19. A massive 8.5% contraction from BNP Paribas is how much they think South Africa will fall by. The World Bank sitting with the second worst prediction on that front there as well, then around 6.5%. The Reserve Bank came out, of course, this week having said minus 6.1 is the contraction figure that they have, with the IMF also sitting around 5.8% too. And then you get to see the likes of Fitch as well sitting near that 3.8 to 3.9%. Moody's and Investec there as well, just around that 3% figure in terms of contraction. That is South Africa's likely contraction at this point. It gets extremely difficult and worrisome when one takes a look at those growth figures.